Hello and welcome back everyone to the Moneycontrol live stream. You have tuned in to Markets with Santo and CJ. Well, we were looking all set to have a very green closing on Friday on the Lal Street, but all those plans have been dumped in the gutter because market is edging lower and we are seeing a lot of profit booking at this point of time. The gains were largely driven by the Asian markets earlier in the morning with the sort of moves that we are seeing in Hong Kong and China, Santo. But it seems profit booking creeped in over the last half an hour, and while we did turn negative for a brief period of time, at this point of time we are just about in the positive territory, and this is despite some very good encouraging numbers coming from two sector leaders, Ultratech Cement and Maruti Suzuki. Both beat their estimates for PAT, and Maruti very spectacularly beat analyst expectations on margins as well. But even then, it's not lifting the sentiment as one would hope for.
Well, CJ, too many negatives at this point for the market to ignore, and as we speak, once again, the Nifty has slipped into the negative.
Wow, it's very volatile at this point of time.
To some extent, this was expected, given that in extended trading hours, you did see selling pressure in Amazon and Apple, and that's reflected in the weak Dow futures at this point in time. But the biggest worry for the market right now is that the FOMC meet next week, and the Fed is likely to raise rates by about 50 basis points at least. So that clearly,
so I hope something changes Powell's mind. I hope so.
Very unlikely. And also, CJ, don't forget the strength in the dollar index. That's traditionally that's never been good for emerging markets in general. And now, while I think you might be tempted to say that this used to happen in the past, I think certain rules still hold.
Yeah, but at this point in time, it seems like the influx of money that was coming in from domestic investors, in particular retail investors, is breaking down some of those relationships. I mean, can you imagine dollar index is at a 20-year high and we are what, just 5 or 6% away from record highs? I bet this would have not happened before COVID.
I think yes, retail investors are probably bailing out the
possibly. I mean, that said, we have a lot of stock action to catch up on. So let's quickly dive into it, Santo.
Well, United Breweries, the stock came out with a good set of quarterly numbers, and the market has also positively reacted to that. However, there is still cause for concern, mainly that margin pressures are there because of higher input costs, and according to broking house Motilal Oswal, this could persist going into the new year, into the current financial year as well, and that in turn makes valuations look very expensive. So while people are back to drinking beer the way they used to do pre-COVID, not much of it will actually flow into the bottom lines of the company.
Yeah, perhaps it may not flow into the bottom line, but what the street can take comfort from is the fact that people are at least drinking beer again, right, Santo? Volumes are going to remain strong in FY23. Even if you look at the earnings that have come out from some of the international peers of United Breweries, such as Pernod Ricard, their Indian sales volume were pretty strong in the March quarter, and that should give some hope that once this input cost issue is probably behind us in another 1 to 2 quarters, maybe the volume story will take the lead. That said, one stock where there was a lot of buoyancy in the market was Shriram Transport Finance. Now, generally, Shriram Transport was one of the laggard NBFCs in the last 1.5 years. But recently, the stock has seen a lot of movement and a lot of investor interest, and that solely is based on the fact that it's a direct beneficiary of the upturn that we are seeing in commercial vehicle sales, right? Nomura, in its report today, noted that bus sales are rising at a very fast tick, largely because schools are reopening, and therefore because schools are reopening, the inventory is being built up, and commercial vehicle sales, therefore, if you speak to a lot of the fund managers as well, that is one part of the automobile sector that everybody is very bullish on. And therefore, given that Shriram Transport Finance is largely into CV financing and vehicular financing, it probably would be the biggest beneficiary, even if you want to have probably a more diversified play on the entire CV story.
What's surprising is, CJ, the talk about recovery in the CV space has been doing the rounds for quite some time now. But if you look at the stock price performance, it's not really, it still continues to be off highs, and that partly has to do with the fact that if you look at the annual earnings for almost now 3 years, that has not moved up in a big way.
Absolutely, NBFCs were under the cosh, but
and with interest rates set to rise,
Yeah.
I think you could have some more problem there. Vedanta is the third stock that we are keeping an eye on. Again, the stock announced, the company announced a 31.50 rupee dividend, and
wow,
also
31 rupees.
yes, and given the fact that it is a good play on the rising commodity prices, that it becomes a combination of both a commodity play as well as a yield play. And
Exactly, it seems
that's
so.
that's the reason.
It seems like after the debacle of the open offer, the promoter is trying to massage the investors a little bit.
And that's yeah.
Anyway, moving on, Shoppers stock. Well, the stock was under pressure today. It was down about 5 to 6% after a weak set of numbers for the March quarter. But that said, if you just keep the numbers, absolute numbers aside, and you focus on the commentary that has come in from the management, that should give a lot of hope, in my opinion, to investors that the stock will be able to brush off today's weakness and probably head higher in the coming weeks and months. The management has indicated that they expect double-digit sales over FY20 levels. That is the pre-COVID levels that we saw. They expect a double-digit growth over that level, which is a very good commentary if you look at it on a standalone basis. Plus, overall, the structural story for apparel industry is very strong. We know that post the introduction of GST, we have seen a lot of formalization in many sectors, and the apparel industry is one of them, where the market share is largely shifting away from the unorganized players to the organized players, and this is something that Shoppers stock will largely benefit from.
Again, CJ, the whole thing boils down to valuations. We are seeing renewed interest in companies like retailers. Trent has also seen a good run up.
Absolutely, yeah.
But overall, if the market sentiment turns bearish, I think the companies with higher valuations have the most to lose. So that's where I would be slightly cautious about. Persistent System stock again in the limelight after good set of fourth quarter earnings. And what sets apart Persistent Systems from others, according to Nomura, is that it has managed to hold on to its margin, something which
flat sequentially, if I'm not wrong.
Which most other IT companies were unable to. And what Nomura is saying is that probably you could see further upgrades to earnings coming from other broking firms as well. So this is a stock to keep an eye out for.
I'm not surprised, Santo. I've been telling you the IT story will come back on its own once the margin pressure is out. So I'm totally not surprised with what Persistent System has come out with and Nomura's commentary on that. Another stock which is not surprising at all, if you have been in this market for the past 1 year, is Angel One, right? The broking company has been coming out with swashbuckling earnings every quarter. Even the Q4 numbers were very strong, and the stock momentum, the bullish momentum in the stock has carried on from the Q4 earnings last week. We have seen on more than 10 to 15% gain in the stock over the past 1 week, and this is largely being driven by a lot of the long-term investors, because if you look at on a daily basis, the delivery share of the volume in the volumes for Angel One is much higher than the past 1 month's average, and that is very strong indicators that a lot of people with a very long-term view on Angel One are accumulating the stock even at these levels. And again, Angel One is also one of those structural stories with the financialization of savings that we are seeing in front of our eyes, with the influx of retail investors into the equity market. Among the listed brokers, given Angel's direct digital presence in in this space compared to some of the legacy brokers such as ICLS Securities and maybe a few others, Angel One is seen as the biggest beneficiary of the financialization move, and therefore investors are willing to pay the over the top valuation that maybe you might have a concern about.
Well, yeah, the only concern here is that its revenue stream is fairly concentrated, bulk of it coming from the broking, and experience has shown that whenever the market slips into a downturn, all those new investors, they are out of the market.
Well, we have not gone out on the past 7 months, so I don't know what you're talking about.
I'm talking about 25 years here,
okay.
CJ.
Okay.
7 months is very short. Indian Energy Exchange, again, the stock has been in the limelight. Good set of fourth quarter earnings, but again, the concerns with regards to Indian Energy Exchange is that twofold. So one is that competitive pressures with the arrival of a third power
Exchange,
exchange
yeah.
also, Pran Urja Solutions, that increases the
This is the thing with
PTC,
yeah,
BSE
PTC India,
Limited and
right, right,
ICICI
right.
Bank. So that is extra competition there, although given the power shortage in the country, ideally trading exchanges like IEX should benefit. And secondly, there is also regulatory pressure. This is that already CERC has asked for a justification of for the 2 paise transaction fee that IEX charges. IEX management is quite confident of justifying that, but analysts tracking the counter, especially Edelweiss, would say that it's a little cautious on that. Plus, it has pointed out to expensive valuations. The stock again had touched a high of 292 in January, but since then it's nowhere near those highs.
Well, talking about caution, Santo, I have 3 stocks on my on my radar today which were buzzing absolutely after the Credit Suisse report. Indraprastha Gas, Gujarat Gas, and Mahanagar Gas. The 3 stocks were down and out today in trading, and for good reasons, of course. Credit Suisse came out with a report downgrading the entire sector basically, and suggesting that even though the stocks have fallen about 30% from their peak, more than 30% from their peak, they're still, investors are still assuming that these companies' margins will largely be stable, and in case of Gujarat Gas, in fact, expand from here. Now, why Credit Suisse feels this is bonkers? Well, because natural gas prices are, going through the sky. I mean, probably if we are in Earth, natural gas prices are somewhere in Pluto right now. So, in that sort of an extreme input cost inflation scenario, Credit Suisse is not able to fathom why investors are still assuming that margins will remain stable, and therefore the brokerage house has gone out on a limb and said that these companies could not see EPS growth for the next 2 years at a stretch, and that the consensus or the street's estimate for earnings for these companies may see a downgrade of as high as 20%, and that is just on the downside, Santo. So this is looking very, very bearish for city gas distributors, and there is a structural angle to this. Okay, you can always say okay, natural gas prices are higher today, maybe they will come down maybe in 6 months time once the Russia-Ukraine issue is out of the order. But here's the important bit. Right now, about 15% of domestic gas supplies are brought from outside, right? Now that is seen improving or going as high as 50% in another 2 to 3 years. Now we all know that international gas prices are higher because they are basically at the mercy of the market forces, right? And we at home set our prices. So therefore, with higher share of imported gas in the overall gas supply, there is no way that these companies can again go back to the glory day margins that they used to enjoy maybe 2 to 3 years ago.
Well, it could be more of a problem for somebody like Gujarat Gas, which is has bulk of its customers as industrial. It supplies predominantly to the industrial consumers, and so it doesn't get the benefit of the gas supplied by the government at administered price. It's not so much of an issue for MGL and IGL, which get a big chunk of it from the government, and they have the control over that. Though that price is anyway much cheaper. Besides, the demand that has proved to be quite sticky. So let's see. It's still early days, I would say, CJ.
Okay, I mean, we will check back on that one maybe 6 months down the line. But is there something that I have missed, Santo?
Well, there's a lot of upheavals in the currency market globally going on. That's mainly because of the strengthening of the dollar. And what has not really caught the headlines, at least in India, is that the steep fall in the yen vis-a-vis the dollar.
And why should that catch headlines in India?
Well, previously, I think there used to be a lot of chatter whenever the yen used to fall, because at some point then the concern would be that it would reverse quickly. A lot of carry trade used to happen in the yen currency. It still happens now, although that has now reduced considerably. That money is no longer going so much into equities. Bonds, Indian bonds, at least at 7% yield, probably more money could be coming into that more than going into equities. But it's also turning out to be a big problem for Japan itself. On one hand, the consumers and corporates there are hurting because of a weak currency. It's gone to a point.
Where are they not?
Yeah,
where are they not?
For a long time, weak currency was seen as par for the course, and it really didn't change anybody's life. But that is now changing because the increase in commodity prices, which is denting consumer spending in Japan, which already has been grappling with low growth for a long time. So this is a space to watch out for. But what is worried most global investors is that you've seen a very sharp fall in the yen in the last 7. It's fallen about 11% in the last 7 weeks, and that is quite a sharp
For a
fall.
currency, that is a very
Yes,
sharp fall.
and IMF has said that this is driven largely by fundamentals, and so ideally the Japanese government should not step in and try to intervene and reverse the course.
Yeah, possibly they don't want to be tagged as a currency manipulator.
So what do you have on the horizon, CJ?
Well, Santo, you said it earlier in the show that Fed will of course be the dominant factor to, next week for the markets. The FOMC is going to meet and decide on a possible rate hike. It's almost a near certainty that they're going to raise rates by 50 basis points, but there is a possibility that it could be as high as 75 basis points if we go by some of the recent commentary coming in. And lastly, earnings. Of course, we have a lot of Nifty 50 companies announcing their earnings. Some of them include Titan, Tata Steel and Hero MotoCorp. So earnings, of course, apart from Fed, will be the other undercurrent of the market.
Well, as we were speaking, the fall in the Nifty has accelerated, down by over 1% now. That's quite
I'll tell you, Santo, it's the weekend trade, playing out. It's just that bulls do not have the confidence at this point of time to carry on their, long positions over the weekend, lest something bad should happen. And at this point of time, it seems only bad things are happening.
Well, CJ, that was not your view early in the morning. You were saying that.
Yeah, early in the morning, I was very confident. It seemed like after yesterday's short covering, I was actually getting ready to a red start today. I was wondering that whether we'll see some weakness, because yesterday's rally was largely short covering. But seeing the strength in the morning, it gave me a little confidence that probably we can see this week out on a higher note. But
things don't seem to be playing.
Yeah, I mean that is the beauty of the market, right? Market humbles you.
With that, we'll let you get back to your trading terminals. There's still about 10 minutes of trade left. So I hope you enjoyed watching this episode of Market with Santo and CJ.
And please post your feedback on the comment section and follow us on the social media links at the bottom of your screen. We'll catch you on Monday morning 9 a.m. sharp. Till then, have a great weekend.
Have a nice weekend.
You too, Santo.
You too,
CJ.
And
take care. Thank you so much. Thank you so much for joining in. How's it going, Santo?